Now, for more on how Harvey is hitting the oil industry, I'm joined from Houston by Carl Larry, a commodities market specialist with Thomson Reuters. Welcome to the show.
Thank you, Rachelle.
Now, what would you say are the biggest concerns stemming from the loss of these refineries so far?
Well, I think getting the refineries back up and running again, is going to be an issue. It's a matter of power. It's a matter of mechanical stability. And then the biggest factor that I think many people are overlooking, it's the human factor. A lot of the workers at these ports, at these refineries are displaced, and getting them back in place is going to be a long and tedious process.
Certainly important to note the human factor in all this. Now, what's interesting is that we've seen crude oil prices drop despite these key oil refineries going offline in the U.S. Now, that's the opposite of what we saw when Hurricane Katrina hit. So why the different reaction?
Well, the big difference now is that we have a lot more onshore production. So that fracking that we've been developing over the past 4 or 5 years has really taken away the worry about losing production when we have hurricanes hit the Gulf Coast. So where we had oil come offline when there's a hurricane in the Gulf, now we have this production that stays online and onshore, no matter how bad the storms.
So then what kind of ripple effect can we expect, not just in the U.S., but beyond in the shorter and longer term?
Well, I definitely think there's going to be an issue with gasoline supplies. That's obvious. We're seeing that right now. The U.S. prices are going higher. But I think that the bigger impact might be in the diesel fuel and jet fuel. When we see building and reconstruction go on here in the Houston area or all of Texas where it's been hit, those diesel prices will really start to rise. Our research team is definitely saying a lower supply of diesel fuel over the past few months and under the 5-year average. So those could really see a big impact going forward.
So then outside of the U.S., how do you think Harvey is going to affect exports?
Well, again, it was just said there was a lot of exports of gasoline going out. There's also a lot of exports of diesel that went out too. So not just to Mexico, but to all of Latin America, even some to Asia. So there is going to be an issue with supply going forward. As long as these refineries are down, we're looking at about 3 million barrels a day that's being affected right now, about 19% of the U.S. production. So that's going to have an impact going forward. And then when we head into the holiday season to the end of the year, it's going to be higher demand, so we'll see higher prices.
Now, having one U.S. state responsible for such a high proportion of refining capacity, do you think perhaps this could be a lesson? Could we perhaps expect more diversification?
Well, we'd like to think so. The issues at hand, and always that have been in hand, are about environmental protection. So we might want to see more refineries in the U.S., especially ones that are not prone to hurricane weather. But again, it's a matter of where can we build them, how fast can we build them, and where do we get the accessibility to things like imports and exports. So it'll be a challenge going forward, but we'll definitely be prepared if something like this will happen again. We know the worst that we've seen so far.
Now, how likely would you say demand from U.S. refineries is going to recover faster than U.S. production?
Well, demand's been good, and we know if we look back at the GDP numbers we just saw a few days ago, we're already at 3% for this last quarter. So the economic recovery is there, and as long as the economy is recovering, not just in the U.S., but in Asia or in Latin America, there's going to be demand for refined products. Gasoline, diesel fuel, jet fuel, it's all going to be high, and going into the end of the year, it's going to be pretty strong.
So then what do you see as the biggest challenges for the U.S. oil industry and people whose livelihoods depend on it?
Well, it's going to be, one of the good things we've had so far is that prices have been fairly low comparatively to about, 2006 to 2008. We're only at $2 gasoline, and it may seem high, it may go higher to $2.25, but these prices going higher is still going to be acceptable. Right now, $2.50 gasoline in America is not such a bad thing. $2.50 diesel is not going to be that bad. So higher prices are ahead, but I think that the U.S. economy can handle these prices. So, it's going to be higher prices, and that's going to be the big challenge.
So then looking at how this affects the dynamic of the energy industry overall, what's your outlook for the U.S.?
Well, there's going to be some change here. I think that the U.S. has gotten, at least the oil industry has become a little bit complacent over the past few years, with prices going sideways for the past few years. We may see more of a hedging strategy, not just in oil companies, but financial institutions and even corporations going forward. So I think that's going to be on the agenda for some change here.
All right, thank you so much. Carl Larry, market specialist for commodities at Thomson Reuters.